All the banks are broke.
There is a risk that the entire banking system could implode, taking with it the savings of millions of Italian, European, and American citizens, as well as the savings of family businesses. In the era where money can be moved with a click, the run on banks could happen faster than anticipated. The longer financial conditions remain strained, the greater the risk that the stress will spread beyond the banking sector, unleashing greater financial and economic damage than expected, writes Moody's in a note, or rather in its latest report on the conditions of bank credit. Now, it seems that the theme of the day is Deutsche Bank and the difficulties of this bank that seems dead for some time. A dead bank full of derivatives, junk bonds that have become garbage after the rescue of creditsuisse. One question: why aren't citizens being told that their money in their bank accounts is at risk for many banks? Not all, in fact, many banks are solid, but many are walking dead. I don't have a crystal ball to know when and if an event can happen. That's how protection works. You move to protect yourself, and if nothing happens, it's better. Time is up. Now is the time. Deutsche Bank's shares are down for the third consecutive day on the Frankfurt Stock Exchange. On Friday, March 24, Deutsche Bank's shares lost 13% at the opening, and yesterday, a little over 7%. The point, however, remains the same. What I have been repeating for the last month and a half about what was happening regarding creditsuisse, I understand that this data may mean nothing to many of you, but the credit default swaps have also jumped to over 170 basis points in this case. This is an indicator. In reality, they are actual contracts that summarize the financial difficulty of a bank. It essentially reflects the risk of a bank's insolvency. How much are the probabilities of failure increasing? Well, the data I just shared with you is the largest daily increase in Deutsche Bank's CZS ever recorded. The T1 bonds currently have a yield, meaning a loss, of 22.87%. This yield, along with the risk of these instruments, has now doubled compared to 2 weeks ago. These bonds are now under pressure. Last week, Credit Suisse decided to write down the value of its bonds to zero after being bailed out by UBS, the government, and the National Bank, essentially all these centralized entities. T1 bonds were practically designed after the 2008 crisis as a mechanism to absorb a bank's potential losses. In simple terms, it's debt, just like everything else. Let's say the bank is in trouble and lacks liquidity. That's when T1 bonds come into play. They are devalued, which essentially becomes a strong point as it strengthens the bank's financial position. Before liquidating bonds to address a bank's liquidity shortfall or difficulty, the shareholders' money should be used, those who should take the risk. They invested in a bank by buying shares, and only later should the bond be activated if necessary. And no, central bankers have decided to partially save Credit Suisse's stocks instead. But instead of completely devaluing the bonds, this type of bonds is causing the system to go haywire. In recent weeks, European and American banks have experienced moments of great fragility and significant market crashes, but authorities say the banking system is solid. Indeed, many banks are solid, but others are not and could bring even the more stable ones down. What I want to talk to you about in this video is the objective reality, the reality of how the numbers and facts stand, instead of burying our heads in the sand.
Well, you've reached the end of the video. If you are interested in learning more about similar topics, here you will find other really interesting videos from the channel. Thanks for watching this video. Click on the like button if you enjoyed it, and do not forget to subscribe in case you didn't. See you on the next one.